No matter your age, your plan for retirement can start today. From the News Channel 5 Network, this is the Retirement Report.
Good morning. Welcome to the Retirement Report. I'm Hank Parrott, your host. We're going to be talking about, of course, the markets and how they're doing, some of the news that's been with regard to jobs, with regard to the economy in general, and what the market's been doing as a response. One of the things I wanted to share with you is when we look at the S&P 500, it's down about 15% year to date. However, this is, and this is in spite of, by the way, in October, the market was up 7.6%, and then November was also a good month, up 8%. So even with back-to-back months like that, we're still down 15% year to date. So that gives you an idea of where we were at as far as throughout this the market year to date. Same thing with the Russell 2000. When we look at small caps, down about 17% year to date, and the November number plus 5 and the and 7 plus 7.1 on the October numbers. So we're seeing some improvements over the last 2 months, but I wouldn't get too comfortable. We still have some very important economic news that's going to be coming out in about a week. So we'll be watching, in fact, next week for the news that's going to, it's going to be the week after next, excuse me, for the week after next, because we're going to be seeing then what the November numbers look like as far as inflation. That's going to have a lot to do with what the Fed's doing. So even though the markets responded favorably, and of course with Chairman Powell's remarks earlier this week when he was talking about possibly easing up, talking about maybe not as big an increase in December, which we were expecting at about a 50 basis points or 0.5%. That's probably going to be the case. However, going forward, he's kind of indicated that they might be able to ease up, and the number we're going to get in November is going to get, or excuse me, in December rather, this month is going to give us some direction there. If we get a good inflation number, meaning that it's showing it's still going down. So if we look in October, inflation at about 8.2, then it dropped down to, in September rather, 8.2, and then in October dropped down to 7.7. Now we're going to see our November number, like I said, in about a little over a week, and then we'll get a bigger idea. Is it showing a trend of going down, which would give the Fed the opportunity to then go easier when they're meeting just a couple of days after getting that news. And of course, maybe even more important, the guidance they're going to give out of that meeting for next year. So even if they stay with the 50 basis points, if they give us guidance that says we may take a pause, the Federal Reserve may take a pause on increasing rates next year, at least for the first month or two, to see if inflation, because there's a lag basically, right? We're getting the effect of the increases we've already had this year. So when you're looking at somewhere, what is it, about 1.3, 3.5, 4% increase this year, that's a lot of rate increases, and there's a lag. You need to wait and see what the effect is. We're seeing some sign, based on the October numbers anyway, that it's coming down. If it continues that way when we get our November number, now they've got a definite, they definitely would want to pause, because if you keep raising rates when inflation is dropping, you might cause it to drop too fast and create a really bad recessionary situation. So we'll be watching very closely. And I say this also, if you're trying to figure out what to do as far as the markets go, or if you're sitting on the sideline maybe in cash, or maybe you're just wondering, where things are going, I'd be watching those numbers and be especially careful, because this is the thing. If we do see inflation coming down, if we do get a pause, all these are positive things, and the market is likely to respond very favorably, and we may in fact have hit the bottom back around the beginning of October, around October 12th, I believe it was. So that would be good news. All right. However, if it's the other, if inflation, in fact, if that was just those October number doesn't show a trend, but in fact it goes back up again, that could be bad. All right. Then we'll be looking at the potential for hitting a new bottom in the market before we get back into that bull territory or start back up again. So things to watch out for, and what it means as far as a recession. There's some things that we're seeing in terms of housing. There's other things that play into this as far as the supply chain. All of these are things that are going to have an impact. What the shopping season is going to be like here in the holidays, how retailers are going to do. A lot of different numbers they're going to be looking at and crunching. Most recently today with the job numbers, that looked pretty good, but that's, in other words, a strong job market still. They're looking to have a weaker job market as part of what they're going to do with rates. So all of these are things we're going to be watching. All of that being said, this is the time again to assess where you're at as far as your portfolios. It's a buy when you're in a buy and hold. When you have index funds and you've got thousands of different companies represented in your portfolio, you don't have to worry too much, right? I mean, we know that even though the market's down, it always goes up, right? This isn't different this time than any other time when we have a bear market. It's not like the sky is falling and everything goes away, okay? These are all companies that are still out there making profits, generating the growth of their stocks. Now, even when the market, so the valuations, when you look at these companies, even if the valuations seem a little lower, or more importantly, the valuations are there, but the market price is down, we know this is going to correct itself. We know that we come out of bull and bear markets are just part of the cycles that we deal with the stock market. Just be prepared for that. All right. Now, it is a time, though, if you're not sure if you're properly allocated, if you're not sure if you're properly diversified, is a good time to reassess that and to make some adjustments then for that. Because it's not, if you think about it, if you've got some funds, some mutual funds or some individual stocks that are really not doing well and those companies, fundamentally are in trouble, that's where you might want to think in terms of making a change and positioning yourself better for when the market does go back up, that you're going to be positioned well to see increases in your portfolio through that period. These are all things we're going to watch, and then we're going to talk about alternatives as well. So when it comes to alternatives, today I'm going to share with you a piece that I've gone over before, but I think this would be a good time in particular with where we're at in the market. This is from Nationwide Retirement Institute, and it's called Be Outliving Your Life, Not Outliving Your Savings, and it's discovering the value of an annuity. And what I want to do here is give you kind of a tutorial on annuities in general. There's a lot of information out there. You see ads all the time about annuities. There's a lot of advisors that, on radio and that talk about annuities and, how to basically, with fixed index annuities as an example, how to participate in when the market goes up, but at the same time, protect yourself when the market goes down. Well, I'm going to explain how that works and also the different types of annuities, the fixed annuity, fixed index annuity, variable annuities, the difference between immediate and deferred annuities. So we'll get into a lot to help you understand these better and to determine whether it's something that may be a benefit to you. All right, but first we're going to take a break. Join us here. We'll be right back on the Retirement Report.